We have two individuals that both have extensive backgrounds, Dr. Kelly Northridge and Danielle Rees. Both of these ladies have extensive backgrounds in startups, in running successful companies, and also in nonprofits. They together are working with Audacity Institute, who happens to be one of the success centers for the nation in the innovative way they plan to use CARES funding. Let's welcome Dr. Kelly Northridge and Danielle Rees.
Thank you for the wonderful introduction. I am Danielle Rees with the Audacity Institute, and I will be doing the Funding Your Business overview and panel. The Audacity Institute is building thriving, inclusive local economies through research, education, and support to underrepresented entrepreneurs. We are very excited about our Rural Business Assistance Program, which we recently launched in partnership with the City of Wells through funding from the GoEd's office. And we have 22 rural businesses who are participating in our 9-month educational training and one-on-one mentoring. We also have 9 community partners who are partnering in our Train the Trainer on mentoring for the new economy. All 22 of those businesses are receiving a forgivable loan to launch and grow their businesses. And I know at least one of them is pitching later today. So we're very excited to be a part of Rural Nevada Pitch Day launch again this year. So for an overview, I'm going to spend the first 20 minutes or so doing an overview on funding, and then I have 5 speakers who will be joining us for the Rural Nevada Funding Panel, and you can see their logos here. So every small business, regardless of business entity or whether it's a Main Street small business or a large potential tech company, every single company at some point in their growth strategy, in their career, they are looking for funding. And so I'm going to provide an overview of all the different fundraising strategies that cover both our small businesses as well as startups. So when we look at the entrepreneurial journey, I'm sure many of you have seen a slide like this. This comes from Techstars. It starts with an idea, and then we move on to learning. And there's this beautiful linear progression that is just a straight line up. But anyone who's actually started their own business or worked with small business owners knows that in reality, the process does not look like that at all. We go up, we go down, we go forward, we go backwards. Sometimes we go upside down. So the process looks nothing like what we're told in textbooks. And similarly, when it comes to the entrepreneur's journey with funding, starting with that idea, we have our friends and family invest, and then we move on and we invest money from sales, and then we have angel investors, and then we get our venture capital funding, and then we have, the golden ticket with this IPO, and we're all billionaires. Again, that's a myth. The actual roller coaster journey looks more like this. So similarly, there's ups and downs, there's bumps in the road, there's moments of wanting to give up, there's great highs and great lows. And hopefully overall, the process of the journey feels like it's fun. So the stats on this roller coaster: 60% of businesses start with less than $25,000. And 1/3 of all businesses start with less than $5,000. So that's important to know. And secondly, all companies have a funding strategy and a funding approach. So if you're a small business owner and you're on this call and you're thinking, I don't have an approach, let me tell you, you already do. So there are several funding approach considerations. The first is whether you are a unicorn or a zebra. So unicorns are what every Silicon Valley venture capital firm is looking for. They're looking for the next Facebook or Uber or Airbnb. They're looking for that company that's going to grow very quickly and get to $1 billion valuation. The majority of companies are zebras. They are creating businesses where they exchange services and goods that their community wants, and they're supporting themselves and their families, and they're growing on a more steady and stable growth path. The next consideration is whether your business is Main Street or high tech, because this will impact your funding approach. And the third is whether you, as the business owner, are seeking patient or high growth capital. Are you seeking funding that will be patient and work with you along the inevitable bumps in the road? Or do you want that high growth capital that's going to push you? So the first one we're going to talk about is bootstrapping. And this comes from the term pulling yourself up by the bootstraps. Almost every business starts this way. And so it's funding your business with your own funds, whether that's your savings, if you're funding it from the profits from your business, putting it back into the business itself. You may be minimizing your accounts receivable, delaying payments, you're minimizing the inventory. This is really the cash flow management that is just the day-to-day operations for many small businesses. And a lot of business owners take on personal debt and they rake up their credit cards. Oftentimes our entrepreneurs who've taken these risks to start these ventures, they don't have the best credit scores. And oftentimes it's just a lot of creativity and sweat to try to make this happen and piece it together. The final strategy here is crowdfunding. And so this way we're talking about the more traditional kind of crowdfunding by selling a product in exchange as a donation, right, through Kickstarter or another one of the online crowdfunding sites. Okay, so several bootstrapping success stories. Spanx by Sarah Blakely was recently in the news because she had grown the whole company entirely from her own funds and had 100% ownership until she just recently sold, I believe it was 55% ownership of the company. The next funding strategy is the venture capital model. So this is for high growth, and VC or venture capital funds, they push the companies hard to grow quickly and to sell fast. And so the selling of the company, that is the exit. That's the way the venture capitalists get their investment back, is when the company exits. And so if you're following this model, you're funding your business with other people's money, not your own. And this works ideal for unicorns and for tech companies. That's actually where the Silicon Valley model was really based. And there are several examples of successes, anywhere from Facebook to Airbnb to Bumble and Stitch Fix. So now I'm going to talk about the 7 types of funding approaches. There's actually only 2 investment categories according to the IRS. There is debt and there is equity. So the only 2. But there's actually 3 types of each, and we're going to go into detail of these. The first is standard equity. I'm going to combine them into one word today. Standard debt or standard equity. The second is convertible debt or convertible equity. And the third is alternative debt or alternative equity. So first, standard debt. Okay, so I'm going to go through the process of what this looks like. Standard debt is a traditional loan. So the first step you as the business owner do is you sign a promissory note that you promise to pay it back. And then the company receives the cash. And then over time, in alignment with the agreed upon terms in the promissory note, the company repays the loan. So there's no valuation of the company. There is a set repayment period. So you've agreed upon terms under which you pay back. And there's a predetermined interest rate that doesn't change. And then on your books, this will be listed on your balance sheet as a liability. And you have set payments regardless of sales. So whether or not your shop is open or closed, whether you have any inventory to sell or not, you are paying the same set payment from month to month or whatever the terms are. So this works for unicorns, and it also works for zebras. And different examples of this, just going to move this little screen around here, is a credit card, whether that's personal or through business, SBA loans, getting a loan through a traditional financial institution like a bank or a credit union, and angel investors. You may get a loan from friends and family, as well as formal angel groups. The next one I'm going to talk about is standard equity. So the process for this is that you would sign a stock purchase agreement, so an agreement to for the investor to buy stock or equity in your company. So they'll have a % ownership in your company. And then the investor gives you the cash. And then in exchange, the company gives the investor the stock or the equity in the company. So this requires that the company has a valuation. So the company is worth $10 million. The company is worth $500,000. So you've agreed upon a set value. And the investor gets ownership. And so the number of shares equals perhaps 5% in the company. It's based on the valuation and how much money is invested in the total % of shares. And then the investor needs to be bought out for there to be an exit in order to make their return. And this works for unicorns traditionally. And then we want to talk about convertible debt or convertible equity. So this involves signing a convertible document. So this may be a convertible note, which is a loan that will convert to equity at some point. Okay, so once that note is signed, the investor hands over the cash, and the company makes a promise, and that this loan will convert to equity at a future date. You can also do this with a safe or something so that it's equity that will convert once there is a valuation of the company. So again, this is a conversion at a future date. And so the company is not valued yet. And at some point in the future, the investor will get ownership in the company. And again, the investor needs an exit for a return. So this is also something that works well for unicorns. Okay, for alternative debt or alternative equity, it's a mouthful. This is an example of revenue-based financing. So you may have heard of revenue shares. So you would sign a revenue share agreement with the investor. The investor would hand over the cash, and then the company and the investor make money together. So an example of this is I co-founded a ski company. And so clearly that's a seasonal based business where our sales are not steady year round. So you can imagine in the winter months, there are a greater number of sales. And so how that would look with this agreement, potentially a revenue share could be that a certain percentage of the total sales would go back to servicing the loan or would go towards the equity for the investor. And so whether that's, $50,000 in sales in the winter months and only $2,000 of sales in the summer months. It also varies for annual fluctuations as well. So this does not require an exit for an investor to make a return. And it also ensures that the money's paid back to the lender. And so this works well for zebras. And our seventh and final category here is raising money from the customer or from your community. So there's two types of crowdfunding. There's a love money or a donation based. So this is what we think of with the Kickstarter and those general ones where you're actually asking for a donation in exchange. It's typically worded as in exchange for a prize. And so it may be, for a t-shirt, or it may be an example of the ski company, a donation in exchange for a pair of skis. That kind of thing. And so it's not directly sales, and it's often done before inventories and stock. And then there's also equity-based crowdfunding, which if you watched the panel last year, we had WeFunder on there so that anyone in the community can actually purchase percent ownership in the company, and this can be done for relatively low costs, and you do not have to be an accredited investor to be able to invest in these companies. And this works for zebras as well. And then growing the business through sales also is a common strategy. So this is an overview of the funding approaches. We've got the loans here on the left from the different areas. We have the love money that comes in from friends and family or from organizations. At Audacity, we like to think that we're the friends and family for those that may not have friends and family that have money to invest in your business or your idea. We also have the different bootstrapping here, including the customers and the community. And then on the venture capital side, you see there's some overlap where there can be the love money here coming from, we have the investors and we have the angels, and also the high growth funding there. So with that, I am going to make a transition here. I'm going to invite my panelists to come on, and I am hoping that they can go ahead and unmute themselves so that when they speak, we'll be able to see them and I can continue to share my screen. So we'll give this a little test. So I'm going to go ahead and go to my next slide, and I'm going to invite our panelists to introduce themselves. And we're just going to go in this order here. So Nick Steele from Access Community Development Financial Institution. Let's see if you can come on and introduce yourself, and that we'll be able to see you.
Hi, Danielle.
Hi, perfect. Welcome, Nick. Love for you to give me an introduction of you and how your organization supports small business owners in rural Nevada, and just a way of introduction for everyone that's coming on. For the business owners who are listening, I want to say it's really important for you to understand where you sit on the funding spectrum. So, you know, similar to humans, all of these entities have different personalities and they look for different things. So when you're, looking to meet with angel investors, they all have different reasons for why they may invest in your business or not, and what they're looking for. And so same thing, we have 5 panelists today. And so I'd love for you to, get to meet them through this panel, see which entity and approach resonates with you and how you want to grow your company, because that's how we define appropriate capital here at Audacity, which we're very passionate about. We want to help business owners and entrepreneurs find the capital that's appropriate for you to grow your business the way that you want, that's in alignment with your goals and your growth. And so this is an opportunity for you to meet several of the panelists. So with that, Nick, I'll have you do the first introduction. Thank you.
Sure. Thanks, Danielle. Appreciate it. I think you did a fantastic job providing an overview to everyone on the life cycle and the different and the variety of ways of funding a business. I'll just jump right in. I'm Nick Steele. I'm the Executive Director of Access Community Capital. Just as a point of clarification, we're not a CDFI yet. We're going through a process. So probably in the first quarter of next year, we'll receive our certification. But as of now, we are a community loan fund, primarily operating in Southern Nevada, but working with partners across the state to roll out some funds that would be available in Northern Nevada and the rest of the state. So I'm super excited about that. Right now, what we do is we are focused on attracting and raising capital and deploying it to underserved communities. We define that by communities that are traditionally overlooked by overlooked traditionally by financial institutions. Then that'll be your women-owned businesses, your BIPOC-owned businesses, veteran-owned businesses. We just announced a loan fund here in the city of North Las Vegas, where we're focusing on your startup companies and your early stage businesses, which I think is really important in this time frame. Michael Brown mentioned earlier, that right now we're coming out of the pandemic, and in this period in time, there are a number of individuals that either have lost their jobs or have decided to start their own companies. And in this era, I think it's imperative for us to support those individuals that have that entrepreneurial spirit that will be the job creators of the future. And so we're really focused on people that have ideas and want to start up companies, and individuals who have started their companies that are still in the early stages, in their first 2 years of operating. And we want to provide capital for them to run their businesses. Just by way of giving some specifics, what we try to do is we raise capital from low cost providers, whether it's from grants and from foundations and government organizations, sometimes financial institutions, and we try to run an efficient process. We invested a lot of money into an online loan platform where people can apply online. We connect directly to their business checking account. We can analyze cash flows without actually looking at financial statements. We look directly into the business cash flows from their bank account, and that saves them the time of actually having to submit financial statements. And sometimes the early stage businesses don't have an accountant as of yet. And so it saves them that time. We can help them. And then we can help them with pairing them up with business resource organizations. And I think you have a couple here on as attendees, but the SBDC out of UNR and UNLV really have done a great job of building an ecosystem to help business owners. And what we do is we focus on the funding, but then we try to partner with those great organizations that are providing technical assistance and can help a business owner go through the challenges, or help them cross off those items that may put them on a path to become more bankable. And so we try to look at—
Perfect, Nick. Thank you. I'm going to, in the interest of time, you just introduced the Small Business Development Center. Awesome. And so I'm going to go ahead and move on and have Caroline McIntosh introduce herself from the Ely office, the Small Business Development Center.
Thank you, Danielle. Good morning. I'm Caroline McIntosh from the Ely office of the Small Business Development Center through the University of Nevada, Reno. And I see our position, we do not do direct funding by any means, but we are the counselors. And I see our job as the connector. And we connect our new businesses, startups, good ideas, and also existing businesses with the resources that they need. And we listen, and try and guide them and ask those pertinent questions. I'm a big believer in the business plan, and that is so important for our startups in particular, and our existing businesses that need to pivot due to the acceleration of change from our pandemic. So we have offices all over the state of Nevada, and you just register through Nevada SBDC.org, and you're assigned and start on the process of working together with someone who's quite an advocate for you. Thank you, Danielle.
Thanks, Caroline. And I would just add that the Small Business Development Center, Caroline, and the other folks have done such a phenomenal job of supporting small business owners with applications, not only for our own Rural Business Assistance Program, but for, whether it's PPP loans or SBA loans, or, any of the government lending processes with which can typically be rather confusing to business owners. And so Caroline and other members of Winnie's and her team really do a phenomenal job of helping businesses understand what they need to have to meet the requirements of the lenders and to answer the questions. So tremendous resource with that. So thank you. Mary Kerner, I'm going to have you introduce yourself and the Rural Nevada Development Corporation.
Hi, good morning. My name is Mary. I'm with SBDC. We have been around for 30 years, coming this January, doing non-traditional small business loans in rural everywhere except Reno and Las Vegas. We do rural Washoe, rural Clark, and everywhere else in between. Non-traditional, meaning we have greater flexibility than some of the traditional lenders. We do like to partner with them as well, but get you into that bank product, thus getting funds back here and the relendable program. So that's about RNDC. I know we're running a little time, so I just wanted to hurry.
Okay, do you want to, I'll let you talk about the I-80 fund when we get to the next question. So great. Thank you, Mary, for that introduction.
Perfect, thanks.
Becca Hood, would you like to introduce yourself from Greater Commercial Lending?
Sure. I've been a commercial lender, so a business lender for about 25 years in both government guaranteed programs and what's referred to as conventional loan programs. And I also was a small business owner myself for a while. So I have a direct connection to what a lot of you are doing. With Greater Nevada, or Greater Commercial Lending, we're part of Greater Nevada Credit Union. And we have 3 different major loan programs, and we're working on adding some others. The first one is for businesses that are applying for loan amounts at $50,000 or less. And those go through our consumer lending division, line of credits 30,000 or less, and equipment loans of 50,000 or less. And then
Becca, I might just stop you there because we're going to go into details of the loan programs in the next question. So thank you for anticipating that and jumping ahead. But I'm gonna let Kelly Northridge from the Audacity Fund introduce herself, and then we'll jump into that. Thank you.
Thank you. Hello, everyone. I'm Kelly Northridge. I'm one of the managing partners of Audacity Fund, and I'm delighted to be here with you today. We are representing the venture or angel side of the house in terms of funding today. Audacity Fund actually provides not only funding, but also training and mentorship to anyone who receives funds through our fund. We are regional specific in terms of across Northern Nevada, which does include our Northern Nevada rurals. And I look forward to talking more about that during this panel.
Great. Thank you so much. Okay, so moving on to the question that Becca anticipated, and we're going to go in the order of the logos below. So we're going to actually start with Caroline. So how would you recommend business owners contact your organization, or how would they establish a successful relationship with you? Many of our entrepreneurs are kind of looking to make that first step of building a business banking relationship. And then if your organization does provide loans, if you could just outline, the loan size amount, the terms, whether you require a business plan or collateral. So we'll start with you, Caroline.
Well, again, Small Business Development Center, we're counselors, and so we do not have any funding of our own, but we connect people, our businesses, with the funding. And again, anyone interested needs to register at Nevada SBDC.org, and they're assigned a counselor depending upon their geographic region. We start meeting with those clients and develop that business plan and help them with their vision. And then we connect them with what the opportunities are in our state and locality. We're very rich with resources as far as business partners, funding partners in White Pine County. And but our folks have just really had a great opportunity with our lenders here to help and really believe in their dreams. So we feel really lucky on this. It's not overwhelming for our new businesses in particular.
Wonderful. Thanks, Caroline. Kelly, we'll go to you.
Thank you. So in terms of Audacity Fund, we do offer appropriate capital to anyone who's selected to join the fund, which means we have a variety of options that we'll talk about later. But in terms of what's sitting here, in order to start the process with us is really as simple as calling and saying hi. So if you go to our website, www.audacityfundreno.com, there's more information about the fund, how to send us a quick email, and we just start talking. It's that simple. We actually have call for applications in certain periods of the year where the funding actually is distributed, but we always like to know the businesses that are in our area and how we might be of help otherwise. In terms of amounts, we have a maximum of $50,000. We love to talk to people who have ideas on napkins, who are just starting out, etc. So we really like to be thought of as your friends and family as you move forward.
Excellent. Thanks, Kelly. Nick from Access Capital. Nick, same questions to you.
Sure. Our loan sizes will depend on the specific program, but primarily they'll range between $1,000 and $25,000 for startup companies and early stage businesses. For your more existing businesses, we have larger loan programs. The terms are generally between 1 and 3 years with interest rates below 7%. While for existing businesses, we may not require a business plan, but for startup and early stage companies, we certainly recommend the individual having a business plan. And if they don't, then we can recommend them to one of our business service providers like the SBDC. One interesting point is that we generally do not require any collateral or equity to be contributed for the loans.
Great. And for an organization to reach out to build a relationship with you, what's the best way?
Sure. We love talking to people that have either ideas or existing businesses, and you can reach out or learn more on our website, accesscommunitycapital.org.
Wonderful. Thank you. Okay. Mary at Rural Nevada Development Corporation.
Yes, so our loan size amounts are $500 up to $250,000 per project. The terms are actually to what the borrower can repay. So there is not an actual set term that we have. We typically will amortize loan longer actual maturity date, just so we can help with cash flow requirements to help the business kind of get over that hump. We do like to see a business plan. Sometimes we'll accept a competitive, because I know sometimes small businesses are crunch, especially through disaster relief and recovery with the pandemic that everybody has been dealing with. We do like to see collateral, although we don't have to have business assets. The IAD fund is specific to Humboldt, Lander, Eureka, and Elko counties. It was seeded by Nevada Gold Mines with a $5 million contribution that was started in July of 2020. And the first year, disaster relief recovery, but now we've moved into two for sustainability, which partners for other programs as well.
Awesome. Mary, you're cutting out just a little bit, but I think we caught the essence of that. The best ways for folks to contact you if they're interested in the IAD fund?
So directly through our website, rncnv.org.
Wonderful. Thank you. Okay, Becca from Greater Commercial Lending. Same
Thank you.
question.
I already started this part, but I'll go back over it again real quick. So we do have options for businesses that are applying for 50,000 or less. Those are typically specifically lines of credit and equipment loans. All other loan types or uses of funds that don't fit within those two, we refer out to community partners, some of which are on this panel. And we really enjoy that relationship with them. For loans over 50,000 up to 5 million, we're typically looking at the SBA programs, SBA 7A. Larger loans, including commercial real estate, can be used on a 504 loan and or a USDA loan. Terms typically for a business loan on an SBA 7A are 7 to 10 years, commercial real estate 25. And rates range anywhere from prime plus 2 to prime plus 2 3/4. The smaller loans at 50,000 rates range from 9.95 up to 16.4 as of today's rate. And that's based on the type of program and the credit risk.
Wonderful. Thank you.
And just real quick, most of those do require business plan or collateral as dictated by the programs.
Great. And so I'm just going to do a quick follow-up question for everyone because we have many new businesses that came out of the pandemic. In fact, for Ruba, I believe it was something like over 40% of the 300 businesses that applied from rural Nevada for the program had a business that was established since the pandemic or had a new idea. And so I'd just like to throw it back to the panelists. If someone is looking to establish a banking relationship, what is the best way build that. And so this may not be with your organization, but it may be, how do you recommend that they go in to a bank? Do they go into the bank that they're personally banking at? Do they need to have their small business development center counselor, make the introduction for them? How do you recommend that? Because there's some barriers for some of our entrepreneurs in building that relationship. So maybe we'll just go reverse order. So going back to you, Becca, do you have a recommendation of how entrepreneurs would best initiate that process of opening their first account?
Sure. So for our process, please do feel free to come into one of the branches. I think it's important to develop a relationship with your banking staff, and oftentimes also maybe connect as you're moving your business along with a commercial lender, even if you're not quite at the stage yet where you feel like you may or may not want a loan. It's good to partner with them, as well as any of the services for business coaching or counseling that you're obtaining, so that you can start planning for the future, talking about next steps and how to position your business to get there.
Wonderful. Does anyone else on the panel want to hop in on that, and how they've helped their clients establish those business banking relationships?
Danielle, this is Caroline. I have many of my clients are minorities and women, and I will ask them if they would like me to help them for an introduction. Sometimes they're not real good about advocating for themselves. And I know with my relationship with them that what their strengths are and what they bring to our community and the services that they will provide. And so I can be more of a cheerleader in those opening times, and even behind the scenes of really helping them. So especially for our minorities, they need a little bit more help in the confidence.
Wonderful. Thanks, Caroline. Okay. Anyone else want to hop in?
Sure, I'll just mention something really quick. In this environment where there are a number of individuals starting up their businesses and starting businesses for the first time, and a number of individuals that may not already have established banking relationships, there's a program called Join Bank On, and you can find out more information at joinbankon.org. But it's an organization that was started by a number of banking institutions, state chartered, as well as credit unions. And it's specifically designed for individuals who are looking to establish their bank accounts for the first time. And they can start those bank accounts at already large institutions without your typical opening fees and fees that are that make it onerous for individuals with low balance accounts.
Wonderful. Thanks, Nick. And while we have you on the screen, I thought I'd ask you another question. In a conversation prior to this panel, you had mentioned that at Access Community Capital that you actually hold, I believe, 10% of your funds for those early stage startups that before they've had a year's worth of revenue. Can you just talk about that a little bit?
Yeah, sure. It's really challenging for startup companies and early stage business to raise debt capital or go to existing institutions without having a long track record. And so for every program that we roll out, we set aside 10% of those assets to lend to startup companies. And so if you don't have a long history of operating, or you just have an idea, we can work with you to build your business plan and to receive additional technical assistance and training, and then finance your idea. And so that's just one way I think that institutions and organizations can be of assistance to people who are just getting started, that don't have access to friends and family and credit cards and other ways that are identified from traditional ways of starting your business.
Awesome. And just to clarify, Nick, that startup definition is any business that is post-revenue but less than 1 year, that they've have some funding coming in, some revenue coming in from sales. And
That is exactly right. So we define startup companies by having less than 1 year of operating revenue. So you can either be an idea or you can have already started, but less than 1 year.
Less than 1 year. Okay, great. Mary, for the I-80 fund, do you have a requirement in terms of how long businesses have had revenue?
No, we do not, because we do the startups and we do existing. So when we first launched, we were seeing a lot of startup businesses, and it kind of had that peaks and valleys where it kind of swings back and forth. And then we were seeing a lot of existing businesses that really needed help with debt refinance and working capital. We're seeing a lot of startups coming through again.
Excellent. And then Becca, most traditional financial institutions, I believe, require 2 years worth of revenue. I just wanted to check in what greater commercial lending requires.
Sure. So it depends on the program. For the consumer loans, the smaller ones under 50,000, that's going to be based off a previous year's tax return. That's really all we look at. For the SBA loans, we can do startups under that. There is a required equity injection of a minimum of 10%, and the lender based on risk may require more depending on the industry or the overall credit risk. But those can be startup businesses, projections based with a strong business plan. Typically within that realm also, you would be looking at someone who has industry experience of some sort, maybe worked for a company as a major manager for a long time and then wants to start their own business based on their experience and expertise. So there is opportunity for startups within that program. Not so much on the USDA side because there's very specific collateral requirements for that program. So most of the time, those are major commercial real estate centric.
Wonderful. Thanks for that.
Sure.
And then Kelly, with the Audacity Fund, you want to share? No, I know a lot about it, but let's share with the panelists the same question.
In terms of creating relationships, actually, I just saw the mouse go over the business plan and collateral and realized I didn't mention that. In terms of Audacity Fund, no, we do not require a business plan, and no, we do not require any types of collateral when it comes to our funds and what we offer. In terms of creating a successful banking relationship, I would just similar to what Caroline said, for those that are being funded through us or just simply working with us, we are more than happy to help be that advocate for you as you move forward that way, and also join in with all the amazing people on this panel.
Great. And the Audacity Fund will do loans for ideas on a napkin.
Absolutely. Yes, we will do. We actually have lots of different funding options, but I think that's a different question you wanted to ask me. So happy to dive into it if you'd like.
Yes. So often entrepreneurs, especially from underserved communities, they think that debt and bootstrapping are their only options. So what are the other options that the Audacity Fund provides?
So Audacity Fund actually provides all of the instruments that you actually mentioned during your wonderful intro in terms of all the things that are out there. So we offer equity, standard equity, standard debt. We offer alternative equity, alternative debt, and we also do the convertibles that you had mentioned earlier. So what that really means is that we, again, love to talk to you at the very beginning phases of your business and help in giving you options for what actually will be the best capital for you as you work towards your long-term goals. So in terms of all of the additional options, you do have more options than just the debt or the bootstrapping. We had mentioned the friends and family round or love monies that come in. Audacity is able to assist in those very early stages with those types of monies that some of us do not actually have access to with our actual friends and family. So there's different options besides just taking on a loan. We can grow with you by offering the equity and debt alternatives where the fund rejuvenates, if you will, as you grow. And there are options for you to have money where we take a very tiny portion of a piece of the company where you still maintain all of the control, but we're there with you to help throughout the business.
Wonderful. And Kelly, can you just talk about how the Audacity Fund perhaps differs in its approach from more traditional venture capital funds?
Certainly. So the Audacity Fund was actually created by business owners for business owners. And so when we think of venture capital, there's a lot of times, as Danielle was mentioning, the high tech, high growth approach where there's a push, if you will, to that unicorn status. Audacity Fund was actually built in order to support appropriate capital for the growth that the entrepreneur wants. So that's why we have so many different funding options. We actually are here to assist with supporting an entrepreneur to grow the way that you want to grow, which is very unique to the venture space. We also are unique in the fact that the Audacity Fund is community funded. So it's actually a nonprofit that has donations that are put into it, and it's an evergreen fund. So there's no investor that's making money off of it. Any returns actually go back into this fund and back out to our community members.
Awesome. Thank you so much. So the panel has just flown by. In our last 2 minutes for the closing, I would like to invite each of the panelists to just share what is the most important thing for entrepreneurs to know when funding their business.
Danielle, it's Caroline again from SBDC. I think it's creating relationships and actually delving into just what Kelly said. There's more than those two opportunities, and actually spending the time to see what their growth is, what their anticipation is for their business, and then create the relationships throughout the community. One of the relationships I help them with is just with the building inspector. And that may seem trite, but for someone trying to open up a business, having that relationship, a working relationship with the building inspector is a huge, it could be a huge barrier if they don't have a good relationship.
Perfect. Thanks, Caroline. Okay, Mary, how about you?
One of the most important things entrepreneurs need to look at is there's so many different products, and you guys have heard about all of those here too. So you really need to look at your business, not just what you're right now, but what they are down the road. When you're getting into those banking relationships with the deposit institutions, pay attention to what those fees are, and then possibly later, like their point of sale systems and all of the things that they are, so that you don't have to switch later on.
Great. Becca?
Hi, a couple things. The first one is, as I mentioned before, creating a relationship and a consultative relationship with a lender within the organization is super important because they can be a good source of advice and options. I think the other key is to make sure that the loan rates and terms that you're offered based on the program fit with your business goals and will help you achieve those goals.
Excellent. And back to you, Nick.
I hate to reiterate the same point, but I do believe the relationships probably means the most, and making those relationships can come in a number of different ways. But really taking time to do the outreach. As when you own your business, you're gonna do an outreach to reach customers, but you need to do the same thing to actually operate your business. Whether it's meeting different individuals at the chambers, the different funding organization, the different banks, and just cast a wide net so that you can introduce yourself. You can see what benefits the individuals that you are looking to create relationships with. So it's not just one-sided, and to really try to create those win-win situations and understand other individuals and their perspectives.
Wonderful. Thank you all so much to all of our panelists. And with that, I will turn it back over to Maggie.